20.5 million barrels per day. That is how much oil moves through Hormuz. This week, someone put a lock on the door.
File, Strait of Hormuz Commercial Interdiction. Period, April 22 to 23, 2026. Diagnosis, state-directed seizure of flagged merchant vessels resulting in de facto closure of primary hydrocarbon transit corridor. IRGC Navy units boarded Panama-flagged MSC Francesca and Liberia-flagged Epaminondas on April 22 in the Strait of Hormuz. Both vessels were diverted to Bandar Abbas under armed escort. Iranian state media published boarding footage on April 23 citing navigation violations. The White House extended existing ceasefire terms and issued no recovery order.
Audit initiated. Strategic asset is Hormuz daily throughput, documented at 20.5 million barrels per day equivalent. Dislocation occurred through direct boarding, not cyber or financial means. Forensic autopsy shows U.S. Fifth Fleet maintained observation posture within 12 nautical miles. Administrative residual identified as standing rules of engagement requiring National Command Authority release for interdiction response. Institutional decay present in deterrence credibility gap between 2019 and 2026.
Systemic baseline for the strait consists of two 2-mile-wide traffic separation schemes governed by unclosed transit passage. Structural residual from prior conflicts includes widespread AIS manipulation and flag of convenience ownership structures. Technical data from Lloyd's indicates both vessels maintained compliant transponders and course. Seizure bypassed the electronic domain entirely. Market response priced Brent at $102.40 and jet fuel Rotterdam at $1,147 per metric ton within 6 hours.
Mapping second-order effects shows 3 channels. First, European aviation fuel reserves indicate a 6-week operational window at current consumption. Second, data center operators in Frankfurt, Amsterdam, and Marseille received priority diesel allocations under national critical infrastructure statutes. Third, civilian heating oil deliveries in Germany and Poland were deferred 14 days. Audit confirms resource triage favors compute continuity over residential thermal load.
Aggressor is IRGC Navy 1st Naval District commanded from Bandar Abbas. No attribution ambiguity. Failure mechanism is Western administrative self-constraint. CENTCOM after action notes document 3 requests for close escort authority denied between January and April. Administrative residual accumulates when legal authority exists but political release is withheld. Result is physical control ceded without kinetic exchange.
Insurance market dislocation quantified. War risk premiums for Gulf transits increased from 0.35% to 1.19% of hull value. Reinsurers placed automatic hold on new coverage for vessels with Israeli beneficial ownership. Structural residual in maritime law allows detention under port state control pretext. This residual is now weaponized as a routine policy tool.
Systemic baseline recalibration underway. Major operators reroute around the Cape of Good Hope, adding 3,400 nautical miles and 12 to 16 days. Container schedule integrity drops below 68% on the Asia-Europe lane. Administrative residual in EU customs software cannot process extended dwell times, triggering automatic demurrage waivers. Audit tracks cascading delay costs at $4.7 billion weekly.
Forensic autopsy conclusion: this seizure is not a piracy event. It is strategic asset extraction during a diplomatic pause. Institutional decay measured by inability to enforce freedom of navigation after public commitment. Dislocation of an energy artery shifts pricing power to the interdictor. Core vulnerability is reliance on a single choke point without redundant pipeline capacity.
Technical mitigation options are limited. Pipeline capacity from the Gulf to the Red Sea remains at 5 million barrels per day, insufficient for baseline demand. Strategic petroleum reserves in the US and EU cover 58 days at current draw. Structural residual of reserve policy assumes a short disruption, not sustained valve control. Audit recommends immediate reclassification of Hormuz transit as contested logistics, not open sea lane.
Final mapping, energy artery seizure completes the first vector of systemic consumption. Physical control supersedes market pricing. Administrative residual in Western Command Structures permits continued passage of Iranian oil under separate waivers while Allied commerce is interdicted. Systemic baseline now includes dual standards. Audit closed.
€90 billion. Approved in hours. One pipeline reopened, one veto disappeared. Coincidence is not a policy tool.
File, European Union Ukraine Financing Override. Period, April 22 to 23, 2026. Diagnosis, elimination of unanimous veto to authorize €90 billion debt instrument for wartime financing. EU ambassadors unblocked a €90 billion loan for Ukraine on April 22 after Hungary withdrew its objection. The objection was linked to Druzhba pipeline oil flows. Pipeline operations resumed April 23 through Ukrainian territory. Formal council approval scheduled for April 23 under the Cyprus presidency. Hungary, Slovakia, and the Czech Republic obtained exemptions from joint borrowing.
Audit initiated. Strategic asset is veto power under Article 31 TEU. Dislocation achieved through linkage of energy delivery to financial approval. Forensic autopsy identifies the European Commission and Council Secretariat as architects of the bypass. Administrative residual created by using budget headroom guarantees instead of direct member state contributions. Institutional decay evident in the shift from consensus to qualified majority by procedural reinterpretation.
Systemic baseline for EU financial assistance required unanimity for external action with military implications. Structural residual from 2022 through 2025 includes repeated Hungarian vetoes on Ukraine aid. Technical mechanism deployed in 2026 was conditionality, restoration of Russian oil via Druzhba in exchange for veto withdrawal. Loan structure uses EU borrowing on capital markets, interest-free to Kiev, repaid from future Russian asset proceeds. This creates off-balance sheet liability.
Mapping shows institutional architecture change. The original December 2025 Council decision stalled for 4 months. On April 21, President Zelensky held calls with the Council President and Commission President. On April 22, Hungary confirmed oil receipt. The veto was lifted within hours. Audit tracks direct correlation between hydrocarbon flow and financial authorization. Administrative residual allows linkage of unrelated policy domains under emergency procedure.
Aggressor is the EU core executive seeking to remove friction. Viktor Orban functioned as the final human veto node. Removal method was not a vote override but economic coercion through pipeline pressure. Forensic autopsy confirms Hungarian domestic refineries operate at 87% dependency on Druzhba crude. Withholding flow created a fiscal crisis in Budapest. Institutional decay measured by conversion of veto from political tool to tradable commodity.
Technical audit of loan terms, €45 billion disbursement scheduled for June 2026. Second tranche in 2027. Repayment source designated as immobilized Russian central bank assets, approximately €210 billion held at Euroclear. Structural residual, legal title remains Russian, creating contingent liability for the EU budget. Systemic baseline assumes asset confiscation will be upheld in international courts. Probability of successful challenge exceeds 40% based on precedent.
Mapping second-order effects. Slovakia and the Czech Republic secured formal opt-outs, reducing the joint guarantee pool. This increases exposure for Germany, France, and Italy. Administrative residual in EU budget rules permits headroom use without national ratification. Audit indicates democratic oversight was bypassed. Structural residual of emergency war powers normalized as standard legislative pathway.
Dislocation of decision-making authority is complete. The veto, designed as a brake, was reclassified as a runtime error. European Foreign Policy Chief Kaja Kallas publicly stated that political courage was required to bypass Hungary. The statement documents intent to override, not persuade. Forensic autopsy shows institutional preference for efficiency over legitimacy. Institutional decay accelerates when procedural shortcuts become precedent.
Financial market response was muted. Eurobond yields rose 11 basis points. Credit rating agencies issued a neutral outlook, citing EU budget backing. Systemic baseline for sovereign debt markets now incorporates war finance as a permanent category. Structural residual in Maastricht criteria suspended since 2020 remains in effect, removing deficit constraints.
Audit of linkage to Vector 1. The Hormuz price spike to $102 increases EU energy import costs by an estimated €18 billion annually. Simultaneously, the EU commits €90 billion in new lending. Administrative residual allows both increased expenditure and increased borrowing without voter consultation. Systemic baseline shifts fiscal burden from present taxpayers to future asset seizures.
Conclusion: structural mutation is not about Ukraine funding. It is about removal of the human veto from a supranational system. Strategic asset dislocated is national sovereignty over fiscal commitments. Aggressor is the institutional core pursuing frictionless decision architecture. Forensic autopsy confirms veto elimination aligns with efficiency doctrine, not democratic accountability.
Recommendation: audit all future EU financial instruments for embedded conditionality linking energy, migration, and defense. Structural residual of unanimity still exists on paper, but is operationally void. Administrative residual will expand to other policy domains.
Dislocation creates a debt chain. Ukraine receives funds and purchases predominantly EU-manufactured weapons systems. Funds return to donor economies within 12 months. Net transfer is liability, not capital. Institutional decay in accounting standards permits classification as a grant-equivalent loan. Vector 2 logged. Institutional architecture now operates without manual override. Audit complete.
Two trains collided in Denmark. The stock market hit a record high. One of these made the news.
File: Danish rail collision and energy system warning. Period: April 23, 2026. Diagnosis: simultaneous physical infrastructure failure and official energy depletion advisory during peak financial market performance. Two passenger trains collided head-on near Hillerød, Denmark at 6:30 a.m. local time on April 23. Emergency services reported 17 to 18 injured, 5 in critical condition. The line connects Hillerød and Kagerup, 40 kilometers north of Copenhagen. On the same day, the IEA issued an energy depletion warning. U.S. equity indices closed at record highs.
Audit initiated. Strategic asset is physical rail infrastructure. Dislocation is kinetic collision, not software error. Forensic autopsy indicates signaling system failure under investigation. Administrative residual identified as deferred maintenance backlog reported by Denmark in a 2024 audit. Institutional decay evident in the gap between digital market valuations and tangible asset condition.
Systemic baseline for Danish rail assumes automatic train control prevents head-on events. Structural residual includes manual override sections on regional lines. Technical data from preliminary report indicates both trains were authorized into a single track segment. Administrative residual in dispatch software allowed conflicting routes. The IEA warning cited declining spare production capacity below 2 million barrels per day.
Mapping convergence. The financial system recorded S&P 500 and NASDAQ intraday records on April 23. The physical system recorded rail failure and energy constraint. Audit shows decoupling of digital valuation from material throughput. Administrative residual in central bank policy supports asset prices while infrastructure budgets remain flat.
Aggressor is not external. It is internal neglect. Denmark maintenance spending declined 14% in real terms since 2021. Forensic autopsy of the collision site shows track circuits were functional but human dispatch error is probable. Institutional decay measured by prioritization of climate targets over steel replacement.
Technical correlation. The energy depletion warning reduces diesel availability for backup rail operations. Denmark's electrified network depends on grid stability. Grid stability depends on gas-fired peaking plants. Gas prices are linked to the Hormuz risk premium from Vector 1. Systemic baseline assumes uninterrupted fuel supply. Structural residual of single-point failure is now exposed.
Mapping shows friction override. Logistics software optimized for just-in-time inventory cannot absorb 14-day shipping delays from Hormuz rerouting. The rail collision removes regional freight capacity for 72 hours minimum. Administrative residual in emergency protocols lacks authority to requisition private trucking at scale. Audit quantifies cumulative delay cost at €340 million for the Scandinavian corridor.
Forensic autopsy conclusion. Physical systems exhibit entropy while digital systems exhibit expansion. Strategic asset dislocated is trust and infrastructure reliability. Institutional decay is a policy choice to fund data centers and military aid over rail signaling upgrades. Dislocation is measurable.
Systemic baseline for the IEA warning assumes demand growth of 1.2 million barrels per day in 2026. Supply growth is projected at 0.4 million. Structural residual of underinvestment since 2015 creates a permanent deficit. Administrative residual in permitting blocks new production. Audit confirms physical constraint, not market speculation.
Integration with vectors 1 and 2 is complete. The Hormuz seizure raises energy costs. The EU loan commits fiscal capacity to an external war. Domestic infrastructure degrades from underfunding. Administrative residual allows governments to prioritize remote strategic objectives over local physical maintenance. Systemic baseline now accepts infrastructure failure as background noise.
Institutional decay quantified. The Danish Transport Ministry budget allocation for signaling upgrades was delayed until 2028. Funds were reallocated to green hydrogen pilot projects. Administrative residual permits reprogramming without legislative review under climate emergency statutes.
Technical audit of the IEA warning. Global spare capacity is now 1.8 million barrels per day, the lowest since 2007. Structural residual of OPEC plus cuts maintained through 2026. Systemic baseline for price stability requires 3.5 million barrels per day. The gap is structural, not cyclical.
Mapping financial disconnect. The Nasdaq gained 1.4% on AI infrastructure earnings. Those earnings depend on data centers consuming 4.2 gigawatts in Northern Virginia alone. Energy required exceeds the output of 2 nuclear plants. Administrative residual in utility regulation allows priority contracts for compute loads over residential heating.
Forensic autopsy links all 3 vectors. Hormuz raises input cost. The EU loan diverts fiscal capacity. Rail failure reduces domestic distribution. Strategic asset dislocated is operational resilience. Dislocation is an intentional trade-off, not an accident.
Audit indicates the system prioritizes data throughput and financial stability metrics. Physical transport is ranked as a secondary residual. Structural residual of citizen expectation remains unaddressed.
Data logged. Audit session terminated. Case closed. Final verdict. 3 vectors, 1 diagnosis. The choke point is sealed, the veto is purged, and the rails are failing. The system does not collapse, it adapts, by sacrificing the physical to preserve the digital. Infrastructure becomes negotiable, sovereignty becomes tradable, and civilian resilience becomes an externality. The question is not whether this architecture will hold. The question is, who authorized the blueprint? Audit terminated. Case remains open.